GitLab stock is rallying today after reporting a strong beat and raise second quarter. The company lifted its full year revenue guidance after surpassing expectations across the top and bottom line during Q2. That beat aided by a major improvement in the company's adjusted operating margin here. Joining us now, we've got GitLab CFO Brian Robins. Brian, great to have you here on the program with us. Take us into some of the success that you saw for the quarter. What was the kind of outlier or catalyst from your perspective?
Yeah, thanks for having me on the show today. Before I get into that, I'd love to tell the viewers what GitLab does, just give a brief overview, and I'll do it from a non-technical standpoint. I've written many S1s in my life, and if you do it with Microsoft Word, most of the time you're playing air traffic controller. With GitLab, it's like Google Docs. You have the system of record of everything, and all the changes and tracks are done, and so you're able to do things much faster and produce things quicker. And so first quarter results was really driven by, we've seen the demand environment be more stable. We delivered 31% year-over-year revenue growth, and we did that with an impressive non-GAAP gross margin of 91%. And so we're seeing strength really in the enterprise, in our ultimate product, which is GitLab's highest priced product, which really combines security and compliance. So I'm really happy with the results that we delivered this quarter.
What are you seeing specifically from customers looking for some of these enterprise-grade capabilities from your platform? What is the demand profile and kind of this spend propensity that you're seeing? Because, a lot of other B2B companies are talking about how there's elongated deal cycles or more scrutiny. What are you seeing from your seat?
Yeah, I think the spending environment overall remains cautious, and we've seen that, but we've adjusted our go-to-market and our sales enablement to overcome that. The great thing about GitLab is we're really easy to implement, and so the time to value and business outcome is really quick. We did a Forrester total a return on investment study, and it's over 400%. It increased about 60 basis points from the last time we did it. And payback period for our ultimate product is less than 6 months.
So I want to switch gears a little bit here to ask specifically about the seat-based pricing strategy that you all have, which, just to familiarize folks, it means that you are charged based on the number of users who have access to the product or the service here. I'm curious about your thinking on that from the CFO's seat at the company. Sorry about that. How are you planning to adapt the seat-based pricing model in a world driven by AI, where there might be fewer users actually on the back end of the product? Could that weigh on your profit margins moving forward?
Yeah, let me touch on that and how I think about it in two different ways. So first, a seat-based model is much easier to buy than a consumption-based model. When you have a consumption-based model, you're worried about how much you're going to consume and how difficult it is to budget. So with the seat-based model, you know exactly what to budget and how many seats you're going to buy. And so this is a large market. It's about a $40 billion TAM. Us and our closest competitor combined is less than 5% of the total market. And so we wanted to make the ease of buying the product and really allow our customers to recognize the positive business outcomes. From an AI perspective, we're a big believer that AI creates more complexity in the software development process. And the more complexity and more software that's developed, a platform such as GitLab will be required to create software with security, compliance, privacy, IP protection, and so forth. And so we feel like we're really well positioned with AI. We talked about on our earnings call, some key customer wins, Barclays, F5, KeyBank. And so we're happy with the AI products, GitLab Duo, that we've launched, and how that's starting to take off in the marketplace.
Brian, just to follow on that, though, we've heard over this course of the earnings season from a lot of CFOs, top brass at companies like yourself, about what this macroeconomic environment, especially on the employment front, could mean for a seat-based model here. How are you modeling that into your own financial performance in the coming quarters if we were to see a pullback either in hiring or a reduction or restructuring in headcount?
Yeah, absolutely. Great question. And we saw that take place really over a year ago. And so, over the course of the last year, I've been talking a lot about contraction, which is really seat rationalization. And procurement departments have just been buying differently than the way they've historically purchased. And so pre-pandemic, or about a year and a half, 2 years ago, procurement departments would try to buy as much as they could for future hiring, future projects. They would want to do a multi-year deal, try to get the biggest discount, maybe a ramp deal, and talk to you every 18 to 24 months. What we're seeing now is in a more cautious spending environment, procurement departments are buying what's needed more on a quarterly basis and coming back to you on a much more regular frequency. And so we have actually seen that, over the course of the last year and a half, 2 years, and that is baked into our model.
All right. Thank you so much, Brian. We're going to have to leave it there, but really appreciate you joining us today. That was Brian Robins. He is over at GitLab as their CFO.